The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks for hanging with me right now, folks, because I got a few technical. My charts, they're not coming up right now, but that's all right. We're going to go live. We're going to get them up there anyway. Let's see if we can get them going. What's going on here this morning? Man, I apologize. We'll have to figure it out. Maybe that'll get us in. Here we go. All right. Let me get my charts for us. We'll jump around to what we have going on this morning. We got markets in negative territory as we kick things off this morning. I hope everyone had a great Christmas out there. I'll share some pictures of Tommy later. He got himself a new police car. Nothing like it. Santa delivering a new police car on Christmas. And yeah, let me make sure, and I apologize, folks, but we are up. Not sure what was going on there. Thinkorswim wasn't letting me in at first. But nonetheless, here we go, and here come those charts. Ready? All right, there we go. We should have them. Okay, we jump around. We kick things off with the S&Ps, negative by 20 points. I sent on Market Insights on Tuesday. Quite a little melt up going on in this market. Holiday trading. We'll see what happens today, but you're talking about light trading. You're talking about light volume. Half day on Christmas Eve, we only did about 1.3 million shares in the futures. You're talking about doing 2.5 million shares on that downdraft. You're talking about doing 2.3 and 2.1 on the days that followed, and then things declined. But we're sitting right back up at that 6,100 price point. That's where we begin the session today, and we're down by about 20 points, trading at 6,078. You jump over the NASDAQ, 21,961. You're negative by 68 points right now. Dow off 154 or 0.3%. We jump over to Bitcoin, down $3,200, 95,880 this morning. You jump over to gold, up by $4 at 26.39. We jump over to yields, one of the stories, and it's not stopping, folks, okay? You jump over to the 10-year, you're down another 9 ticks. We're talking about a 10-year of 4.64%. And yeah, you look at this thing, right? It just keeps dropping. Yeah, we'll delete that one. We're going to go a higher number there. 4.64%. The yield on the 10-year, and you take a look at the daily, we're coming back into the lows of April, and we're below the lows of November. That's when the 10-year was approaching almost 5 percentage points, 5 full percentage. And yeah, we're sitting at 4.63. So what do we have? We have higher yield. And that's helping the dollar a little bit. Up 179 ticks for the dollar right now, trading at 108.21 on the DXY. So we got what? Higher yields, dollar strength, gold holding up relatively well yet again, right? Yields continuing to rise. And we got gold consolidating between about 26 and 2,800. Near the bottom range of that, 26.39. You have lows out there in gold, hanging November 14th of 25.41. So yeah, quite the volatility. All right, we jump over to economic data this morning. We kick things off with continuing claims. 1.91 million is the number on continuing, okay? So you talk about initial claims, tick down to 219,000, but how about that continuing number, right? Look at that red. Continuing claims above 1.9. You start the year at about 1.7, almost. 1.725 it looks like. Nonetheless, initial claims under 220, just chopping around at a very healthy number. Continuing claims continuing to rise, as they say, yeah. And yeah, that's people that have been out of work. And the continuing number is 1 week delayed, remember. So continuing, we're getting data as of December 14th. On initial claims, we're getting data as of last Friday, December 21st. Yeah, the low level of initial jobless claims this year reflects the low take-up rate of unemployment benefits due to ineligibility for some and lack of incentives to apply for others. Crazy, right? The surge of continuing shows the labor market is slowing. Who's not eligible and not incentivized? I'd love to hear that one explained a little bit further. Let's see if they do. Now that's going to be a Bloomberg article. Pretty remarkable, right? You lose a job, most people are pretty much incentivized no matter what state you're living in. Some states have better unemployment benefits than others. Massachusetts, one of the best out there. Florida, one of the worst. But as in, you don't get much in Florida on unemployment compared to many other states, especially in the Northeast. But everybody's pretty much incentivized. But nonetheless, we get that story out this morning. And you have markets slightly in the red this morning as we give back just some of that melt higher. And we could melt higher again, folks. All right, it's December 26th. We're coming into Friday trading tomorrow. Now, next week, all we're closed for is Wednesday. But it does feel like these 2 weeks, right? Especially this week, we're going to come back full days Monday, Tuesday, Thursday, Friday next week. But because New Year's Eve falls on a Tuesday, New Year's Day, everybody's off on Wednesday. We're back for Thursday and Friday. The kids are still off school next week. Yeah. You know, if you're in the Northeast, right, and you got a holiday vacation, whether you're up at whatever it is, skiing, going to Loon Mountain, going wherever you're going, those beautiful mountains in the Northeast, or you're just going to somewhere beautiful, maybe coming down to Florida for a little winter holiday. The holiday continues. We're going to see some holiday trading, but does not mean that we won't get some volatility. So be aware of it. We'll see how the volume rests today, but right now we got the S&Ps down by about 20 points. We check out some of the Magnificent Seven. Apple shares. Look at this run, right? Look at this run even as the market has pulled back a bit. You back it up to the August 5th low when the market was a little worried about that yen unwinding trade. You were at 196. Yeah, how about being up more than 30% for Apple from that time? You're opening this morning basically flat at 258 for Apple. Quite the year in these tech stocks, right? Let's put it back to a 15-minute. There's your action on Apple. Amazon's been on quite a run recently as well. You're opening up down about 50 cents for Amazon, $228.30 for Amazon shares. We jump to some of the retailers. Walmart shares, quite a year for them as well. Walmart down about 10 pennies to $92.50. Target, different story in terms of on the year. We back it up. $132.40. We were as high as $180 at one point. The haves and the have-nots, right? Walmart is a have. Target, a have-not this year. One of the haves, TJ Maxx. TJX. Yeah, they own Marshalls, too. Big fan of Marshalls. TJX, up to 128 this year. You kick it off at 90. On the flip side of that, the have-nots, Kohl's. Yeah, be careful on this Kohl's one. You know, I say, yeah, you can try and catch a fall knife. You're going to get a bounce. You're going to get some volatility on a percentage basis. But as technical traders, find strength on that chart. Cannot find it, man. You're talking about lows on a consistent basis on a weekly. That's a weekly, folks. 1377 was the low last week. It's been a painful year for Kohl's, and watch out. And S&Ps, we're down by 23. Whoops. We're kicking off December 26th trading in about 15 minutes, and stay tuned, folks. We'll come back. We'll talk some equities. We'll talk some different stories going on this morning. December 26th, we got market action, and we got the S&Ps negative by 22. Stay tuned, folks. We'll be coming back in 3 minutes. Don't go away.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got crude oil continuing to chop it around between that 68 to 72 area. We put it on the daily right in the middle of that area, 70.64 right now, the price of crude. And as we talked about, gold holding up pretty well. We got higher yields yet again. We have dollar strength with the dollar at 108.20 right now. Let's check on it. Yeah, I put out the gold report this week, and, you ever get a pullback in the dollar, man, watch out on that gold contract. Now, they are not trading completely in unison, but remarkable strength on the dollar at a time when gold is still trading above 2,600, and we have the dollar that's traded from 100 to 108, folks. Yeah, just remarkable strength. You look at this chart of gold, you look at where the dollar's been this year. Let's just back it up for a day real quick. For a year real quick. This is just going back a year. What's nice is December 26th. You put it on a yearly chart that goes back a year. We're basically just looking at 2024. Quite a banner year for gold. We get up to this 2,600 price point in September, right? And this is what I'm talking about, though. You get up to this 2,600 price point in September, okay? But since September, the dollar has rallied from 100 to 108, folks, right? And in that time, there's your September run. Now, you had quite a pullback, which helped gold, okay? So from July to September, you have the dollar pullback from, 106 to 100? And that was a huge impetus, right? There it is. We go from 106, July 26th. We were up there in April. So in April and in July, we're at 106. The dollar weakens all the way to 100. Okay, so there's your April and July, right? We're sitting at 106 on the dollar. Gold's consolidating between 2,300 and 2,400. Your dollar breaks from 106 to 100. That gives the market the impetus to send gold from 2,400 to 2,800. The dollar then gives it up. Excuse me. The dollar then strengthens. Yeah, from 108, right here. From 100 to 108. And gold is at the same price. So you ever get another weakening, right? That could be another leg up. Just keep your eye on it, man, because, gold has had some tough days, but nothing like what could have happened. Realistically, if you're looking at the dollar, gold should be back between 23 to 2,400. That's where gold was trading when the dollar was at 100. We're 10% higher in the gold contract, and I think that's here to stay, that premium. Okay? So if that premium's here to stay, we'll see what happens with the dollar. We'll see what happens with yields. As we continue to drop, and we now have the 10-year probably approaching 4 point, what are we at? Let's see. Yeah, 4.64. But nonetheless, keep your eye on it, because the market right now, when we start talking about, it's going to be pretty remarkable if you swing the other way, right? For many times, people talked about that the Fed had too many cuts priced in next year. We're talking about 5 cuts. We're talking about maybe 6 cuts next year. Do you remember those days? Boy, those were some days. Now, what's the market pricing in? 1 cut next year. That's the biggest number, folks. We're at 4.25 or 4.5 right now. You add that, you add it to the 1, and you're talking about the market thinks there's a 60% chance that we get no cuts or 1 next year. Are we really going to get hikes then? Because you have to look at things from a risk reward. Hikes are not priced into this right now. Okay? It all goes down the line. We're either going to stay where we are, get 1 cut, get 2, 3, 4, or 0.3% on the 5 to bring us to 3.25. 3 to 3.25. Looking at things from a risk reward perspective, I have to start saying maybe there's a chance they have to cut more. We saw continuing claims this morning, right? When you're starting at a preface that the market is pricing in 1 cut over the next 8 meetings, 1 cut over the next 8 meetings, and we're sitting at 4.25 to 4.5%, and you got continuing claims rising, there's the possibility, okay? And that's where, we all make decisions. We all have market biases. They come into our trades. And yes, there's a very real chance that we are higher for longer right now, but this market's priced for higher for longer. That's what I'm getting to, right? This market is priced higher for longer. It's priced, folks, okay? That's it. Yeah. You go out till December 10th of 2025, and the market thinks we might be where we are right now, and maybe we get 1 cut, maybe we get 2. That's higher for longer, folks. So what's the risk? Well, as gold investors out there, okay, the risk to the market is the Fed needs to cut a little bit more. This economy is a little bit weaker than they realize, or a little bit weaker than they're assessing in their risks, right? Because they're worried about the economy, but they're also worried about price stability right now, which is why they're on pause. They got 2 mandates, full employment and price stability. They're pausing because they're worried about price stability and inflation coming back. If that's the case, then the economy should be firing on all cylinders. Well, look at those continuing claims this morning, right? Look at the risks present, where maybe after the Fed pauses, and listen, we'll see what happens with the new administration. No matter if you're a fan of them or you're not, no one's quite sure where those policies are going to lie, right? And we will find out. But nonetheless, you got yields pretty high. We're higher for longer right now. We'll see where they go. But I like the setup in gold, man. That's the bottom line. I like the setup in gold. Gold is behaving remarkably well. Okay, this isn't the buy just yet, I don't think. But yeah, you better watch those yields. You better watch that dollar. And if this dollar falters, sitting at 108.25 as we've been, you could get quite the pullback. The other story of that is, Trump comes in and you really got some inflationary forces battling. Maybe the immigration crackdown's a little bit bigger. Maybe the tariff's a little bit bigger than the market is expecting where it comes from policies. You can't go bigger than what he was talking about on the campaign trail. Okay, it's going to be somewhere in between. And if that happens and you get the 10-year above 5, you get the dollar strengthening, yeah, you can see a run. All right, Europe's in trouble, man. The dollar and U.S. yields are going to be the best game in town. But that's priced in right now where we are. And we'll see where we go from there. All right. And what else we got going on? Yeah, this one. No, that's the terminal story. Yeah, this one. Russia. Surprised the market doesn't flare up even more. Russia shot a plane out of the sky and killed almost 40 people over the weekend, folks. I mean, quite, the story, the human life out there. But that's a passenger jet, okay? And yeah, it's in a different part of the world, but those are just passengers flying, folks. Normal people, okay? And yeah, that's quite a deal when you're flying over Moscow in different parts. No, excuse me. Where are they? In Ukraine? From Baku to Azerbaijan, diverted course over an area where Moscow's air defenses have battled Ukrainians. Kazakhstan, after turning around over the Caspian Sea, geopolitical tensions. It's one of the risks out there. We'll finish that conversation up. We're coming back for the opening bell. S&P's off by 21. We'll take a look at some individual equities.
The consistency
Don't go away,
you're
folks.
looking for is closer than you think. One or two adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the second and fourth Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. December 26th, markets open. S&P's off by 16 points. We catch a little bit of a bid, up almost 10 points from where we were just coming into the opening bell. You see that chop, right? Tiny action. We trade low at about 3 a.m. Eastern time. Markets trade lower. We'll see what we do today, as I mentioned, right? Going to be a low volatility day today. Doesn't mean that you don't get swings. Sometimes they don't make sense, folks. Less market participants. Be careful. Keep your top stops tight out there today, because you can get some quick moves in this market, even on a light day, and sometimes even more so. Look at the melt up we had on Tuesday, right? You're talking about 1%. 1% on a half day. Market just melts higher as everybody's getting ready for Christmas Eve eggnog. Why not? All right. What else we got pulled up? Making sure I got it all. What were we just talking about? No, we got the deficit. We got there. All right, let's jump around to Christmas morning. Why not? A little sharing. There's the man, Tommy O'Brien, with his presents. He was ready. He was fired up for Santa Claus on Christmas morning. Share a little life. Why not? He was ready. And watch out, folks, as I said, there's a new officer on patrol today. He's got his Christmas car. He's ready. The police, they're in action. You got to love it. You know, I did find myself amused. I was getting a couple things. He got a piano as well. Those were the two gifts, the bigger ones. Get him into some, I had to get him something fun. The piano, you know, congratulations, Tommy. Get ready for piano lessons. Not exactly Santa, but the car. And he got a video game and some Sonic and all that good stuff. But yeah, a lot of boxes from China. We got a stand and a chair for the piano right from China. Of course, right? We'll see how those tariffs play out. I was reading an interesting article on Bloomberg last week talking about two brothers built $1 billion business building cheap toys in China. And, of course, they're facing quite a reckoning with the potential tariffs coming down the line. And one of the things they said in there, though, is that they're going to be okay no matter what. Because from the infrastructure and the ability for them to process goods cheaply and deliver them from China can't get matched anywhere. Even with tariffs, they're going to be okay. Going to hurt their bottom line, but it is interesting when you talk about it on that level. I'll see if I can find that article and put it into the den because it was an interesting one for sure. All right. Let's see what else we got going on. We talked about claims. Yeah, we talked about Russia, man. We'll see how that one plays out. I mean, just hit by Russia's air defense. Kind of surprised that's not reverberating a little bit more this morning for things to kind of not fall apart, right? But yeah, there's a lot at stake there, of course. You got Trump coming in. He, for some reason, loves Putin. Don't know how that's going to play out, but nonetheless. We'll jump around to some equities. Tesla shares. Quite the acceleration for them on Tuesday to 470. Tesla giving up some of those gains. You're down about $4 this morning. We keep our eye on Apple approaching the $4 trillion mark. Look at that pop on the open, up another 0.6%. I was talking about this on Tuesday. I think we're talking about somewhere near 462 or something. Look at this, 3.93. 3.93. Yeah. What do we got to get? $5 from here. 264.82. 264 and change, and you got the first $1 trillion company ever. We'll see. $4, man. Apple almost did $4 on Tuesday. It's up $14 from where we were last Friday. What is going on, man? Is this a flight to safety right now for Apple? Because you're talking about, man, we've almost done a 1-to-1 A to B, C to D. Check this out. Look at this. A 1-to-1 just from where we were at 164 takes you to 269, and we're at 259. That's an amazing 1-to-1 over the period of what, 8 months we're talking about, and that would push it to 269. I mean, folks, that 1-to-1 A to B, C to D since April, this is wild. You're talking about almost $100 added, and I just showed you that Apple's got 15 billion shares outstanding. Apple has added $1.5 trillion in market cap since April. Whew. That's some lofty expectations built into this market, man. And remember, that run started, let me take some of these off for some clarity on Apple. That run started on the super cycle, right? Apple's having some woes, the market not figuring out what's going on for 2024, right? Shopping around where we were in 2023. Apple almost tests the lows we got from October 2023. We start talking super cycle in April, right? They start talking that, guess what? You're going to have an upgraded phone. You're going to have a 16 plus. You're going to have to all this stuff. Has that all played out? I don't know if that's played out exactly how they thought. Yeah, Apple's in a good spot, but are they in a $4 trillion spot? Compared to what's happening in the rest of the market right now, there's something going on with Apple right now in terms of whether it's just a flight to safety, man, a flight to their dividend, whatever it is. You're up at another 0.5% for Apple. You jump over to Amazon shares, down 0.6%. Microsoft shares flat this morning. You jump over to Google, down about 0.4%. We jump over to Meta, down 0.7. You see, on all these days, Apple just constantly ahead, right? We covered Tesla, down by 1.3%. Netflix shares down by 0.7%. If you got a chance, they had some good football games on yesterday, but they did not deliver. As in no competition whatsoever. You had Mahomes out there. They lock up the number 1 seed. They go to 14-1. Kansas City has scored less than 30 points every game this year, and they're 14-1. There's only 3 other teams that have done that this year in terms of scoring less than 30 points. Maybe it's 30 points or less, whatever that. The only other 3 teams to be under 30 points, 30 or less all season, Patriots are one of them. I forget the others. They're horrible teams. They all got like 3 wins. And here's Kansas City sitting at 14-1. But guess what? Great teams just figure out a way to get it done. Brady used to do it all the time. All the time. When they were having those seasons, when they were going 14-2, right? They're going 15-1. They're going 13-3. They were locking up the AFC East every time. Yeah, they had great teams. But a lot of times, what was it? It was them figuring out a way to get a one score win, right? And they're doing it. So we'll see where the future goes in terms of the playoffs. But Mahomes gets it done. And then the second game was just a walloping. So not exactly what you would have wanted in terms of not really competitive. There was no nail biters. You had 2 games on Netflix. The one thing they did well, though, no glitches whatsoever. So they make it through Christmas. That's really all they needed. Everybody tuning into Netflix, but I'm sure they wanted some better games. Both games really tough. The one that was interesting here, you want to do a little bit bigger picture, I saw memes about it last night all the time, is that the NFL is coming for the NBA. Now, I'm not an NBA fan. Just how I love basketball, I love sports. Whatever sport you're into, man, get into it, right? Kids, just put kids in a sport. Put them in an activity, whatever it is. They got to do activities. Activities, even if you're an adult, get yourself in some activities, folks. It can just be walks. Go do something, right? Go play some basketball if you want to at the gym, whatever it is. Not a fan of watching basketball, though. This doesn't get me going. But Christmas Day used to be the NBA. NBA on TNT, even I knew that one, okay? And what is it now? The NFL is trying to take over. NBA is just going to be just fine. The NBA is a global sport. That's why LeBron makes so much money. But the football's trying to get that done, and they're coming for Christmas. And it is interesting, just like that. I'm sure they got those NBA execs worried. All right, markets clawing it back. We got a little bit of a melt higher. S&P is only negative by 13 right now. We're trading at 6,085. NASDAQ only negative by 23. And Apple on the hunt for $4 trillion. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the market right now in positive territory. Apple catches a bid. We hit 260 on Apple shares. And yeah, you're talking about 3.925 trillion. Man, yeah, 75 billion. They're only 75 billion away from 4 trillion. Remarkable acceleration. All right, we talked some cars. So let's talk some of Google's Waymo. Google, negative by 0.4% right now. We take a look at Tesla right now. TSLA, quite a run-up for Tesla since the election, down by 1% right now. But you jump over to this story talking about just Waymo, right? 2024, we'll see where the future goes, but quite a year and quite a shakeup for that autonomous vehicle. And yeah, you have GM shuttering their Cruise robotaxi business. I think they spent $10 billion. I think I was reading that in this article earlier. $10 billion before they shuttered it. That is quite an investment on something you end up shuttering. $10 billion. It's a big market they were shooting for. It was a big bet, and they lost. Many others have done it. But yeah, Waymo, 700,000 I think was the number in here. Rides. Let's see. Yeah, there it is. When GM decided to retreat, it had poured $10 billion into Cruise. Okay? So the global ride-sharing market is projected to grow from $123 billion this year to $480 billion by 2032. I'll tell you, folks, the cost of, driving a car, the cost of insurance, the cost of repairs that go into it, it's going to get to a level that ownership, and the next article is talking about affordable cars and tariffs, okay? But this is where the two are going to merge, and you're going to see that people have the ability potentially, and, the freedom of owning a car, jumping in the car, we get it. But yeah, that could change. Yeah, and there it is. So 4 million paid autonomous trips total. Yeah, the project has completed more than 4 million paid trips. That's more than triple the number a year ago when Waymo said it completed 700,000. Somebody help me out with the math on that. 4 million trips total, more than triple that number a year ago when it said it had 700,000. Somebody tell them that 700,000 times 3, even if you add it on top of it, yeah, it's more than triple. Either way, they're growing rapidly this year. And yeah, we'll see where they go from there. You got Tesla coming in there. You're going to have Amazon coming in there. Yeah. It's all coming. Now, we talked about tariffs. We talked about inflation. We talked about yields. Everybody talks about cars. Where's it going to hit potentially? And this is where the battle is going to be. We're going to see where rhetoric meets reality, okay? I don't think Trump's going to ruin the country, but it's going to be a battle in terms of short-term pain for long-term success. And if you really want to hit these markets, there's going to be a repricing of everything. We are used to cheap imports, folks, from Mexico, Canada, and especially China. The only way to get not used to that is for us to pay more money. Okay? Trump's tariff plan to hit affordable cars the hardest. Yeah, you better believe it. Mexico and Canada. Yeah. Nearly 1/3 of all vehicles below 30 grand built in Mexico. You're talking about the Nissan Sentra, Ford Maverick. Yeah. A decade ago, Mexico was responsible for 1/5 of affordable cars. They are now at 1 out of 3. So they were at 20%. They're now at 33% almost is that number. So get ready for it, folks. You want those tariffs? You want a $30,000 car? Get ready to pay more money. Yeah. Kia. Oof. You want a Telluride? You might want to go out, which is among more than a dozen automakers building cars in Mexico, makes its forte. The K4 compact sedans in the country for U.S. export. Together, those two vehicles, 18% of Kia's U.S. sales. The Forte and the K4. I'm always talking up that Telluride, which I like for sure. Telluride's not under 30 grand though. Average monthly payment on a new car, as I chuckle, $700. I'm actually more surprised it was $500 in 2016, to be fair. Right? You think of that. We're talking about, it's about to be 2,000, and this is where numbers go bonkers in people's head, that you can't understand how much more people are making on income in the same way, right? $500 in 2016, you're talking about 9 years, man. Yeah, that's not a lot. Yeah, that's not a lot at all. You compound something, 9 years, 500 to 700. I'm surprised it was 500. I really am. The cars were that expensive already. That's just the average, though. Yeah. 1 in 5 is over 1,000. Boy, folks, if you're out there, and I know you, I'm saying you, the proverbial you, right? If anyone's out there spending more than $1,000 in a monthly payment, you just better have the income to support it, right? You better not be living paycheck to paycheck, because you don't need to spend $1,000 per paycheck, okay? You can go out and find a very nice car for 20 to 30 grand in the used market. You can. And yeah, very nice car, okay? But $1,000, this is just where it's bonkers, man. Percentage of affordable car market built in Mexico. As I said, going from about 1 of 5 to 1 in 3. Yeah. 4 million vehicles a year, 20 factories. So keep this in mind, man. You're looking for those numbers. You're looking. We're going to see, right? We're going to see the tariffs, and just keep in mind of what it's going to hit there. In Mexico, wages start at $350 to $450 an hour. You know, and this is where it's going to get interesting. You want to buy an American car, you're going to pay $33 an hour to put it together. That's not going to be a car that's $30,000, folks. That's the deal. You want a car that's 30 grand, you're going to buy a Kia that's made in Mexico, where the workers are making $4 an hour. Yeah. Maybe you can make the case that in the long run, it's not good to be sending all of those jobs to Mexico. That's great. But that comes with a lot of short-term pain, and that's where I don't appreciate sometimes where the authenticity of the conversations that take place around tariffs, everything gets so political. Make the case, make the argument. They're great arguments. I think in decades for Tommy now, right? I think in decades. I think, how can the country and the world be a better place in 10, 20, 30 years for Tommy, even 40 when he's my age, which is bonkers to think about. And yeah, some short-term pain, but bring the reality that there might be some short-term pain and say it's worth it in the long run. Nobody is saying that. Nobody's saying that these tariffs are going to come in and it's going to be tough to get off of sending all of our jobs overseas. We're going to bring them back and we're going to have to pay more in the short term, but it'll be better. No one's making those arguments. So be ready for them, man. Because if you slap these tariffs, you're seeing what's happening in terms of what's there. Yeah. And yeah, they talk about car companies bringing their production into the U.S., right? BMW, $1.5 billion factory outside of Mexico, okay, or inside, yeah. But keep your eye on that one, man. So you go, whether you're talking about self-driving cars, you're talking about everything, man. And Tesla, a little bit of a rollover there, off 1.4. We keep our eye on Apple. Yeah, a little bit of a rollover as well. Market's pulling back. NASDAQ 100 off by 95 right now. S&P's off by 22. December 26th trading. Stay tuned, folks. One more segment. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Markets, watch out. S&P's down 32. Yeah, we just caught a bid on the open up to 6,086, and boom, just like that. S&P's off by 20 points from there. NASDAQ 100, we're trailing lower. You get the Dow off by 141. And remember, the low volume that we had on this little melt-up, and maybe the melt-up is gone. But, you know, you're talking about volume on that acceleration on the 18th of December on Fed Day. You're talking about kind of a continuation at the bottom there. Yeah, we got a little bit of a lift higher, but you see the trail off coming into that holiday trading. We'll see how we do today, but S&P is negative by 30 right now. Couple articles to finish up with. This one from the Journal talking about a split in consumer spending. Are you under 50 grand or are you over 100? And one thing I just want to touch on here, it's interesting. They talked to one gentleman. Let's see, where was he? Yeah, here he is. Chris Peterson, Chief Executive of Newell Brands. They make Sharpies, they make Graco strollers, they make kitchen appliances. And guess what? Blenders. Okay, just one example. Stronger demand if they cost more than $100. dwindling demand for entry-level blenders at 20 or less. Next year, 100% of our innovation is going to be at medium and higher price points. We're not innovating at all against the lower price points anymore. And you're seeing this happen, right? And look at that. Consumer sentiment by income groups. Yeah, I mean, that's why you've seen Walmart accelerate higher, right? They're getting a lot more six-figure income earners at Walmart across the board. And then we finish it up with that article I talked about, the billionaire brothers making toys in China. All right, you've seen them all. I pulled this up. I was like, they're making those? I've seen them all at Target and Walmart. The generic brand, Legos, all that stuff. But one I wanted to get to here, this is the quote I was talking about. China's supply chain is still unbeatable. Even with tariffs, we cannot beat it for efficiency. Well, we'll ask incoming President Trump if he thinks he can't do anything about that with tariffs. Tongue in cheek, as in, of course you can't to a certain degree. All right, folks, thanks so much for kicking off December 26th right here at TFNN. Basil did his show at 8 a.m. Okay, we're going to have that coming up. We got live programming. And after that, folks, December 26th. Appreciate you kicking your day off right here. Stay tuned. I'll see you tomorrow morning, folks. Thanks. Have a great one.